Do not keep cash in the bank. 6 safer and better assets than cash. What if I told you that keeping money in your bank account is actually making you poorer every single year? Not because you're spending too much, not because you're bad with money, but because cash itself is silently losing value. Banks tell you your money is growing, but the truth is, only the number grows, not the value. And in this video, I'll explain why cash in the bank is one of the weakest assets, how inflation quietly steals your wealth, and most importantly, if you care about your financial future, watch this till the end. Banks have told us one story for decades. Put your money in the bank. It's safe. It earns interest. Your money grows. But here's the uncomfortable truth. Backhand index pointing right, your money does not grow in the bank. Backhand index pointing right, it slowly dies. Yes, the balance increases. Yes, you earn interest. But when you adjust for inflation, your real purchasing power goes down. That's not growth. That's loss. And the worst part? Most people never realize it. Cash feels safe because it doesn't fluctuate. You can access it anytime. Banks guarantee it. Governments insure it. But safety is not the same as wealth preservation. Let me give you a simple example. You deposit $100,000 in a savings account. Bank interest, 1%. Inflation, 5%. After 1 year. Bank balance, $101,000. Real value, $96,000. You didn't gain money. You lost $4,000 in purchasing power. And this happens every single year. Inflation is not loud. It doesn't announce itself. It quietly increases. Rent, groceries, healthcare, education, insurance, and slowly reduces what your money can buy. This is why inflation is called the hidden tax. And cash is the biggest victim. When governments print more money, your existing money becomes worth less. Banks don't protect you from inflation. They profit from it. Holding cash long-term means guaranteed loss of value, no inflation protection, no real growth, no compounding. Cash is useful only for emergency funds, short-term expenses, but not for wealth building. Smart people don't ask, is it safe? They ask, will it protect my purchasing power? Now the big question, where should your money go? If cash is weak, what is better? Here are 6 safer and smarter assets than cash. Gold has survived wars, recessions, currency collapses, governments. Why? Because gold is limited. It cannot be printed. Protects against inflation. Hedge against currency devaluation. Global acceptance. No counterparty risk. Over the last 20 years, gold average return, 9–10%. Cash real return, negative. Gold doesn't make you rich overnight. Gold does something better. It keeps you from becoming poor. Silver is not just a precious metal. It's an industrial necessity. Used in solar panels, electric vehicles, electronics, medical equipment. Silver has growing demand, limited supply. Unlike cash, silver has intrinsic value. Many experts believe silver may outperform gold in the future. For small investors, silver is powerful, affordable, and strategic. Let's clear a myth. The stock market is not gambling. Speculation is gambling. Long-term investing is ownership. When you buy stocks, you own businesses, cash flows, innovation, productivity. Historically, stock markets beat inflation. Cash never does. S&P 500 long-term average, 10% per year. Cash real return, negative. The key is long-term mindset. Index funds, quality companies. Time in the market beats timing the market. Real estate loves inflation. When inflation rises, property values increase. Rent increases. Debt becomes cheaper. Real estate provides cash flow, appreciation, tax benefits. That's why wealthy people love property. Even if you can't buy physical property, REITs give you exposure without owning buildings. Real estate is not fast money. It's generational wealth. For conservative investors, inflation-protected securities adjust with inflation. They won't make you rich, but they protect capital better than cash. Ideal for retirees, risk-averse investors. Capital preservation, better than letting money rot in the bank. This is the most ignored asset. Your skills can increase income, beat inflation, create leverage. Business owners can raise prices, control cash flow, benefit from inflation. Employees suffer from inflation. Business owners adapt to it. The highest return asset is your ability to earn more. Smart people. Asterisk keep 3 to 6 months cash. Asterisk invest the rest. Asterisk diversify assets. Asterisk think long-term. They understand. Cash is temporary. Assets are permanent. Crossmark hoarding cash. Crossmark fear of volatility. Crossmark waiting forever. Crossmark trusting banks blindly. The biggest risk is doing nothing. Banks are not evil. They are businesses. They protect themselves, not you. Inflation will not stop. Cash will not win. If your money stays idle, someone else is using it to get rich. If you don't control your money, inflation will. If you don't own assets, you'll work forever. And if your money stays in the bank, it's not safe. It's silently shrinking. Choose assets, not illusions. Before you leave, if this video helped you understand why keeping too much cash in the bank is actually risky, backhand index pointing right, hit the like button. It really helps this video reach more people. And if you want more honest, no-nonsense videos about money, inflation, and building real wealth, backhand index pointing right, subscribe to the channel and turn on the notification bell so you don't miss the next one. Remember, banks won't teach you this. Schools won't teach you this. But financial awareness can change your life. Thanks for watching, and I'll see you in the next video.